The growth in aggregate GST collection for states is likely to moderate to 12 to 14% in FY24 from 20% in FY23, according to Crisil. This is because of two main factors. First, the base effect will wear off as the GST collections recover from the pandemic-induced slump in FY2. The economic growth will also moderate to around 7% in FY24 from a high of 9.5% in FY23, as per Crisil's projections. This means that the GST revenue buoyancy, which measures the responsiveness of GST collections to changes in GDP, will decline in FY. Crisil estimates that the GST revenue buoyancy for states will fall to 1.7 to 1.9 times in FY24 from 2.1 to 2.3 times in FY. This implies that for every 1% increase in GDP, the GST collections will increase by 1.7 to 1.9% in FY24, compared to 2.1 to 2.3% in FY. A lower GST revenue buoyancy will make it harder for states to achieve their fiscal targets and meet their expenditure needs. GST collections have been a key source of revenue for states in India, especially after the implementation of the GST regime. According to Crisil, a rating agency, GST collections account for 30 to 35% of the total revenues of states. This means that any change in GST collections can have a significant impact on the fiscal health of states. In the last fiscal year, FY23, GST collections witnessed a robust growth of 20% on year, reaching 1.68 rupees lakh crore in April. This was the highest ever monthly GST collection and was driven by factors such as economic recovery, improved compliance, and higher imports. GST collections from imports rose by 27% in December 2020 compared to December 2019, reflecting the increased demand for imported goods. However, Crisil expects that the growth in GST collections will moderate to 12 to 14% in FY. This is because of the base effect, as the previous year had a low base due to the pandemic-induced lockdowns and disruptions. Moreover, the inflationary pressures are likely to ease in the coming months, which will reduce the nominal growth of GST collections. Additionally, the withdrawal of GST compensation support from the center will also affect the revenue growth of states. Despite the moderation, GST collections will remain the biggest driver of revenue growth for states, as they account for 30 to 35% of their total revenues. States will also benefit from the devolution of central taxes, which is linked to the gross tax collections by the center. Crisil estimates that the central tax devolutions pool will grow by 10% in FY. Furthermore, states will also rely on excise duty and sales tax from liquor sales, which are expected to grow by 10 to 12% in FY. Therefore, GST collections will continue to play a crucial role in supporting the fiscal position of states in India. However, states will also have to manage their expenditure prudently and diversify their revenue sources to achieve fiscal sustainability in the long run.